Welcome to Bitcoinlens episode 22. So today we're going to talk about, we're going to change it up a little bit. Just still a lot of great news this week, but this week I wanted to kind of cover entry into Bitcoin and the different means that you can enter Bitcoin and be exposed to Bitcoin. Just a quick recap of some of the news this week. Of course, the prices once again we've hit another all-time high. We're right at 105,000. First time it's hit that, so it's unbelievable. We saw Forbes report this week that Trump is confirming his strategic reserve plans, and it could be as soon as the first week. And I also saw some news with Argentina now also pushing for perhaps adopting some Bitcoin standards there. But rather than going over all the news this week, I really wanted to kind of give you all a little bit of options in how you can be exposed to Bitcoin. Because some of you may still be listening and not be exposed at all at Bitcoin, or wondering maybe, can I get a little bit more creative in how I'm exposed to my Bitcoin, or how I can buy Bitcoin and maybe different means, or maybe you want to earn Bitcoin multiple ways. So I just wanted to cover a few of those strategies and some of these things that you can do in order to expose yourself and perhaps tap into some avenues that you may have not known of. So with that being said, the first thing there is just remember to like, share, subscribe this podcast, and let me kick us off here. So first of all, the exchanges. So if you're not familiar with these exchanges, there are a bunch of them that you can look at. There's Gemini, Coinbase, River. You've got Kraken, Binance is also one. And you can essentially buy your Bitcoin off these exchanges. So they've got a bunch of crypto on there. The only thing with these exchanges, I can't speak for all the international ones, but most now I know has KYC, so know your customer. So just keep in mind that if you want to buy yourself Bitcoin directly through an exchange, and I'm referring to actual Bitcoin, not ETFs or anything like that, you will have to do KYC. So you'll have to do the know your customer and do some identity verification. I also know once you hit certain thresholds of buying Bitcoin, they'll ask for additional information. So we're not only talking ID, driver's license, that kind of thing. We're talking about you're depositing money into this exchange. You've hit a certain threshold. They may put a lock on your account, and they may ask you, like, where is this money actually from? So you may have to send some evidence. I guess it's just part of some of the crypto regulations, but they just make sure that the money is not obtained through maybe some criminal means or some suspect means. So just keep that in mind as you go through one of these exchanges: Gemini, Robinhood, Kraken, etc. You can definitely be asked to use KYC. Coinbase is another big one. Coinbase now needs additional verification. So just a heads up there. Some of the key things to consider with these exchanges, though, you can use exchanges, or you can simplify it a little bit and use apps like Venmo. You can use something like Robinhood. Those are a little bit easier to use, and you can also use some other ones, like that. But these exchanges are pretty easy to use once you've verified. Really basic, 3 clicks. Most of them mobile apps as well, so very basic to buy Bitcoin on there. A few things to consider as well is, I would not, if you're buying Bitcoin on an exchange, I would not keep it on an exchange. Definitely send it to some cold wallets where you can store it, or multiple cold wallets. I would not keep it on an exchange, just because you're still ultimately under the control of whoever owns that exchange. So you definitely want to move it off that exchange as soon as you possibly can. It usually takes about 3 to 5 days to become available to withdraw and send to a cold wallet. So just keep that in mind as well. So the KYC is a big factor there. The fees, the fees are slightly different. I've noticed, like, there's some small changes between Gemini, River, Kraken. I've bought Bitcoin off all of these, Coinbase as well. There's some slight changes in fees there. I found River is actually really good with their fees. And they've also got a setup where if you do reoccurring buys, you can actually get no fees. So as long as you set any reoccurring buy, like on a weekly, daily, hourly, monthly basis, there's actually no fees. So I think some of the other exchanges also have that, but keep an eye on that when you do set up your payments, that you can actually do that. I've actually used that feature on multiple exchanges. So do check that out. River, what I like about it was it's Bitcoin only, so it kind of makes it seamless if you're just starting out. So I would definitely recommend starting out perhaps with River or something like that, or Gemini. But so that's really the key ones there on the exchanges. Like I said, once again, don't leave it on exchanges. I still see people tweet about their funds being locked, well held, frozen. So you definitely want to get off there as soon as you can. Moving on to mining. So mining is another way you could obtain some Bitcoin. Few things to consider there. You'll have to purchase some mining equipment as well. So maybe some ant miners, and that may be difficult based on the actual difficulty to mine Bitcoin, and it may not be as profitable for you to buy your own mining equipment since the difficulty is pretty high right now. There are some cloud mining services too. If you want to expose yourself that way, get some Bitcoin via cloud mining like F2 Hash, Ecos, Hash Smart. That's a few options you could use. Also, mining pools you could use. So you could use a F2 pool, Brains pool. There's a few there, like Ant pool, via BTC, Clover pool, I believe is another one I've used in the past. And so these are some cool ways to expose yourself through some mining. If you just want to maybe play with that and see if you want to do that. Now, just to kind of let you know, to obtain one Bitcoin, it's roughly right now with the difficulty and everything as of 12:15. It's about a 0.85 ratio, so 85% cost of the actual cost of Bitcoin to mine one Bitcoin. So, meaning if the price of Bitcoin is 100,000, it'll roughly cost you about $85,000 to mine one Bitcoin today. So that's the average price that's been calculated, and there's obviously you may ask like how do you calculate that and kind of give us a little bit more on that like what do you mean there? So basically, when the mining costs are lower than Bitcoin's market value, more miners will join. So right now, that is still true. Like I just said, 85% of an actual price of one Bitcoin. So you're still going to have a demand for new miners to join, whether that's mine pools, individuals, or just some cloud mining that you perhaps purchase. There's still that incentive to do that. When the mining costs are higher than the miner's revenue, that's when you see miners will actually drop. And it's kind of like it's kind of cool too because it makes you kind of think of like traditional mining, like mining gold too, right? If the price of gold is skyrocketing and the difficulty is still at a certain level, you're going to have more gold miners. But if the price of mining gold, costs more than actual gold itself, then you're not going to have miners. So there's that kind of parallel between gold and Bitcoin there, which is pretty neat when you're referring to mining. Now, there's a few other things to think of when mining is the difficulty. I've mentioned difficulty in a bunch of other pods. Some of the other factors affecting difficulty, other than what I just mentioned, is the total network hash rate. Like, what's the hash rate? That determines the difficulty. The number of active miners, mining equipment efficiency. So, mining equipment, the ASICs processors, they're becoming more efficient every year. The Bitcoin price is another impact on mining and the actual attractiveness of mining, an incentive for you to mine. And then, of course, electricity costs too, right? So you can have low, like 10 cents per kilowatt hour, or you could have something very, you can have much higher electricity rates depending on where you live. Now, also, you can check the difficulty too of mining. You can go to like websites like blockchain.info, btc.com. There's a few others. I believe Mempool's another one, mempool.space. So there's a few we can check the actual mining difficulty and kind of decide like whether you are ready to mine or whether that seems attractive. A lot of these websites they'll give you kind of rough estimates like based on what you're putting up in front, but how much you can actually earn. So that's a nice way to kind of make Bitcoin a little bit cheaper, but it does require a little bit of work on the front end if you're going to be using ant miners or some ASICs miners there. So now, keep in mind too, if you join cloud mining or some mining pools, you will there will be some fees, so additional fees that you have to pay to those mining companies that host these ASICs processors. So just keep that in mind if you do decide to pursue cloud mining. So some people I've actually a lot of people ask me that. Well, what happens if all the Bitcoin is mined? Like where do the miners go? So first of all, none of us listening to this or watching this right now should be worried since the last Bitcoin will be mined in 2140, so roughly 120 years from now. So unless there's some serious medical advances, none of us will see the last Bitcoin mined. But it's still a good question though, right? What happens to Bitcoin after? Like maybe you have grandkids, great grandkids, they could see that day and they could potentially inherit your Bitcoin. So how's that going to look? So, really, what's going to happen is the Bitcoin mining award is going to go away, and instead, they will have transaction fees. So, I anticipate the transaction fees will go up for Bitcoin miners, and they will strictly earn from transaction processing. And so basically, today Bitcoin mining, there's some small fees included, but I anticipate those fees will probably go up, and that'll increase as the adoption of Bitcoin grows as well. And also, you know, we got to keep in mind too, to keep the Bitcoin network secure. We also do need miners to stay on the network. Like if we have one miner, Bitcoin's not that secure anymore. Now we got a centralized network. So we do the fees will go up eventually, and that's where the L2s may come in, and the layer 2 protocols, where we can maybe buy Bitcoin or use Bitcoin more efficiently on the level 2, on the layer 2 level there, and use that for things like purchasing smaller things. But yeah, ultimately the fees will have to be attractive for miners to stay on the network, and to maintain that security. So there'll be really an incentive for everyone to pay the miners whatever that demand is, right? Just like gold miners, it's whatever that demand is. That's what they'll be paid. That's where the price will be set based on the demand. Now, another way to get Bitcoin, expose yourself to Bitcoin, is via peer to peer. So you may want to say, some of you may be in a situation where you just don't want to be on exchanges. You don't feel comfortable handing out your KYC, know your customer, putting all your identification out on the web, and letting the government see everything and everywhere that you process transactions. So for those a little bit more advanced users, folks who've been around a little bit more, I'd say then you could perhaps pursue peer-to-peer transactions. So there's some centralized P2P platforms, local Bitcoins, Paxful, Binance P2P, Hodl Hodl. There's a bunch. There's Bisq, Kyber Swap, AirSwap. There's a whole lot. But honestly, you can do this through in-person transactions as well. You can do this through digital payment apps. This is basically all you're doing for peer-to-peer. It's just person to person directly. So you're just buying Bitcoin directly from someone, and you're not doing it through some intermediary. You're not relying on business hours. You're not relying on transaction fees from banks and exchanges, and you're not handing out your KYC. You're just buying the Bitcoin directly. So, you can do this with bank transfer, meetup groups, crypto meetups. There's different ways to do that. You can also do this through like a cold wallet. You got a cold wallet like a Trezor or a Nano, something like that. You can absolutely buy peer to peer directly from the cold wallet as well. So that's another way. I'd say probably don't start out this way. This is if you're a little bit more advanced, you've done a little more research, and you feel comfortable with how the Bitcoin network works, the Bitcoin blockchain works, and you feel comfortable with your holdings, and you've got a nice plan in place, then maybe pursue this method. But this is definitely if you want to stay a little bit more, if you have a high regard for your privacy, then I would definitely say, maybe look at this method. So, other than peer to peer, some people may say, listen, I don't feel comfortable getting on a Bitcoin exchange. I don't feel comfortable with KYC. Peer to peer seems dangerous. I don't want to do that. I don't want to lose money from someone I don't trust. Then maybe you're a W 2 employee. Maybe you're exposed to a 401k. I'd say look at buying Bitcoin through a 401k. So you can get exposure through ETFs here. There's a few that's really popular: IBIT, BitB, FBTC. Those are some popular ones. And basically, what you can do, you just set up a brokerage account. Like if you have a Fidelity account, for instance, I know some of the other 401k brokerage accounts that your company may offer, like Fidelity and some other ones. You can set up a brokerage account. You can transfer your 401k straight to the brokerage account, and now you're exposed to Bitcoin. And that is, even though you're not now owning physical Bitcoin, this is a much, for those a little bit more conservative with how they buy their Bitcoin, this is a very safe way to do it, because you're now buying it through a major bank and financial institution that's heavily regulated. So they can't just lose your Bitcoin, and, they can't just run away with your Bitcoin. They're heavily regulated. So you're basically still one to one, like your ETF is tied to the price of Bitcoin. Obviously, that's the back end asset, that the underlying asset to this ETF. So this exchange traded fund. So basically, that's all that is, right? You're buying shares in a large exchange traded fund or ETF, and the underlying asset to this ETF is Bitcoin. So that's a nice way to do it. Definitely recommend, for those who are uncomfortable with buying Bitcoin directly right now, at least have money in your 401k exposed to Bitcoin. And that's an easy thing to do, easy to set up. If you have questions about that, I'm sure anyone at your company can assist you with that, or any of the Fidelity folks or any brokerage folks could help you with that. So that's one way. If you a little bit more risk averse, I'd say look at the new options trading you can now do on Bitcoin. So I know BlackRock, IBIT, that's their ETF that they launched earlier this year. So now you can do options trading on IBIT as well. So that is an interesting one there from BlackRock. And essentially, if you're not familiar with the options trading, it's just a bunch of puts and calls, right? So you're basically making a bet on whether this ETF share price will go up or down without actually owning the stock. So you're not actually owning the stock, but what you do have is you have a strike price and you have an expiration date. So depending if you do a call, so basically with a call option, it lets you bet the stock will rise, and that'll basically give you the right to buy at a set price or that strike price. And the put option is the opposite. So basically, you're betting that the stock price will fall, and it gives you the right to sell at that price. So there's an expiration date and there's a strike price. So if you far exceeded that price, the strike price, if you will, at their expiration date, you could earn way more or you could lose way more, depending if you put in a put or a call. So this is another way to be exposed to Bitcoin. And I know IBIT, they released that options trading on that. So great one there for you to look at as well if you're a little bit more risk averse. A few considerations from all these methods I just gave you. Those are really the main methods you can do. You can expose yourself and enter yourself into the Bitcoin world. But some of the considerations is the risk. What kind of risk appetite do you have? The transaction fees, that's a big one. Some transaction fees are a little bit higher. Remember the reoccurring buys I told you about on the exchanges, where you can kind of pretty much remove the transaction fees. Verification requirements. Remember, on the exchanges, you're going to have to do KYC. So that's a big requirement there. And then local regulations, some of the tax implications. Keep that in mind too as you're moving money, as you're selling, as with calls and puts. Just remember, if you're selling Bitcoin there, you're going to create tax events. So just keep that in mind as well. So also think of the security measures, like I mentioned. My recommendation is definitely look at a cold wallet. So, there's market volatility we got to think about as well. So that's another thing to look at. So market volatility is definitely huge, and especially if you're going to be risking yourself with, the options trading. That's definitely something you want to look at. Yeah, you can make a lot of money with the volatility, but you can also really get hurt badly. So for me, based on everything I've told you on this podcast for the previous 21 episodes, my recommendation is buy Bitcoin every week, every 2 weeks, whenever possible. Stack Bitcoin, hodl it, buy wherever you can. If you don't feel comfortable, buy it on the exchanges. If you do feel comfortable, do peer to peer. And honestly, that's my recommendation. And then after that, you transfer that right directly to your cold wallet or multiple cold wallets or a combination of cold wallets. So I definitely recommend doing that. That's the most secure. That's going to give you the most secure measure there. It's going to give you the most freedom if you need to move to a different jurisdiction. That's what I would recommend. But hopefully that was insightful. There was a bunch of methods of how you can expose yourself to Bitcoin. Some of the pros and cons to each method, and hopefully that was helpful. So I'll talk to you all next week and have a great week. Thank you.